with us here on the 230 factor, 14 and a half odd points on the Nifty, 60-80 right now, so some 10 points off the day high. Raamdeo Agarwal is joining in right now, Joint Managing Director at Motilal Oswal Financial Services. Third quarter numbers came through. So thanks very much for your time. Afternoon, Prashant here.
Thank you.
Sir, third quarter sequentially, I can see there is some improvement. Year on year, of course, there is growth as well. Could you run us through what are you seeing in stockbroking, in asset management, in lending? What are you seeing?
Yeah. So clearly, broking revenues are up sequentially, very marginally, 1 or 2%. Year on year also we are positive. So clearly there is a sense of stabilization in the business at the current level. But because the expenses are growing a little faster, we have operating profits after adjustments, before exceptionals, is lower sequentially as well as year on year. But thanks to our profit on sale of assets and other extraordinaries, the number declared looks to be 28-29 crores, which is significantly higher than that of last year's same quarter number. But operationally we are probably this is the lowest quarterly result, though the top line has signs of recovering.
No, so I mean, so stripped off the exceptionals, all the exceptionals, what is the number? Like to like?
It's about 19 crores.
19 crores.
Yeah.
So then what should we read? I mean, you're saying top line is largely okay, is stable, but so what should we read from these numbers? 19 crore number.
Yeah, so Prashant, this is a cyclical business, and it tends to reflect the investor mood. I'm a retail investor mood because large revenues are coming from retail side, and we know the participation is very muted. The cash to total market turnover, so the total market turnover is come down from peak of 30%, 28-30%, which should be the norm, to more like 8% in here. So clearly market has expanded, but because of this drop in the change in the mix, the brokerage revenue on the table is significantly shrunk. And as the market picks up and as the investors' participation increases, this 7-8% starts going up to 15, 20, 25% of the expanded turnover. And that when it is going to start, this quarter we have seen the signs that cash to total volume turnover has gone up from 8 to 10%. Will it continue to kind of keep expanding? That's anybody's call. But most likely we have seen the bottom of the investor participation. And typically it takes 7-year cycle, 2-3 years were bad and 4-5 years are good. But this time we have already kind of had a tough 4 years. Let's see, I mean, how many good years and when it starts.
Hopefully it's already started. What about fund-based activities? What was the performance there?
Yeah, so again in fund-based activities, what is happening is that we have a very strong gross sales, but the net sales, because of the redemption at every higher level of the market, redemption pressure is increasing. Like last month when we crossed 6,000, we saw very strong redemptions. Even the current month, January is running, redemptions are running ahead of the subscription. So there is a very kind of mindset among the investors that if they don't sell now, I think they are going to lose their capital or something like that, or they have a very attractive alternative investment in real estate or fixed income. So that's what is really investor behavior right now. Some people, they say that markets will, investor participation will come when there will be left out filling, which will come after market goes up beyond 21,000 or so, or other asset classes don't perform. So one doesn't know when the animal spirits of investors will rise. And in last 12 months we have seen it is the best performing asset class all over the world, not only in India, and yet the aversion to equity is at peak.
But you said real estate. Real estate is appreciation, I guess, is slowed down, especially in cities like Mumbai, Delhi. Delhi in some cases that's actually going down now. So there is some moderation in prices which can be seen even in Mumbai here. So, what explains this this dichotomy? Because it's a chicken and egg situation. Market will go up if participation comes. Participation will come if markets go up.
No, market has actually gone up despite withdrawal of participation. If you see, domestics have withdrawn and foreigners have bought big time. So in last 1 year, domestics have broadly sold more than 1 lakh crore worth of stocks net to the outsiders. So what I'm saying is the market dynamics is such that this is a retail-less boom, so to say, so far. From a bottom and for entire 12 months, we never saw retail participating, and yet there is a kind of a boom in some very large section of large caps. We have kind of a mini boom. So that's the character of the market. Every time it surprises, but eventually all the retailers, retail investors, they come and join the force, and that's where the so-called boom kind of conditions are being created in the marketplace.
So then let's talk about the underlying business, which is essentially stock markets.
Yeah.
And I mean, I guess, you know, that comes up. business looks great. What is your sense there?
You're saying whether business is good or bad?
No, I'm saying, what is your view on the market itself, Mr. Agarwal?
Yeah.
Because I guess that, you know, business depends on that. You know,
Yeah.
things look up, business looks up.
Sure. See, markets are, if you had asked me a year back, I would have not said market will do 30%. So we don't know where the market is headed precisely, but it looks conditions are becoming even more conducive for market to remain buoyant, and should give you 15-20% kind of return, because one is that interest rates are likely to come down, whether it comes down in January or March or whatever, but the stage is getting set for some kind of fall. People are becoming impatient, and second is the earnings growth. If you see this quarter's earnings, that's looking pretty promising to start with, whether it is a Reliance, whether it is a banking system, or so we are seeing more of a positive surprises than negative ones, and so if the earnings pickup continue rest of the year, and global flow also, global equity aversion is kind of reducing. I believe in the first 15 days, the global mutual funds have got record inflow into equities, and that is kind of overflowing into India also. So if that backdrop continues, the sustained buying by the foreigners continue, IPO market remains subdued, earnings remain a little stronger, interest rate is lower, I don't see any reason why we should not be doing 15-20% normal growth, particularly in the stocks which are of good quality.
Mr. Agarwal, good afternoon. While we're talking about this, what about the threat of downgrades that still exist? Now you've got Moody's getting negative on banks. The S&P issue still exists with the overall rating for India itself. I mean, in that outlook, in that such a kind of an environment, is it likely that the funds will still continue to come in?
I didn't get your question.
I'm talking about ratings downgrades, if at all that's an imminent threat to India as a sovereign, as well as now Moody's talking about ratings going down on banks. So you think foreign money will still continue to flow in such a situation as well?
Yeah, I think one is the whether rating cut will come or not. I don't have any clue. But the credibility of rating agencies' ratings are very, very low now. I mean, the investors are doing things irrespective of whatever rating agencies are doing, and that has been happening even when India was below investment grade. I mean, till for bulk of the time. I don't think foreign investors particularly bothered about what is the rating and all. They kept on buying, but positive rating definitely helps in getting bigger funds and more diversified investors. So it can hurt some of the very marquee ones, very big ones, those who are conscious of this rating. I mean, unless it is investment grade ratings, we will not get into this country. If that kind of policy is there, clearly it will hurt. But and I think Government of India is conscious of this, and they are taking all the steps. And even this petroleum product thing, probably there is somewhere the threat of credit rating is there in their action.
Right. You've always been positive on Cane India since a really long time. Are you holding that call?
Yeah. I mean, For last 1 year it has not made any money. Though the company has worked well, they have performed, but the market has decided to ignore it for prolonged period. So we have to supply that patience, and I don't see any change in the story.
That similar case in point holds for even Reliance?
Yeah, I mean, Reliance is a very interesting case. I mean, if petrol diesel decontrol has happened and diesel decontrol actually goes through, I don't think if you look at the current movement of the market is positively surprised, and market thinks that yes, there's a good probability that it can go through, but they're not entirely they're entirely not sure that it will go through. So if it goes through, then Reliance clearly will be a big beneficiary, because their ambitious petroleum product marketing plan that will become a reality.
Right. Mr. Agarwal, anything else, like how you have a conviction on Kane India? Anything else that you've added onto the portfolio which is looking seemingly much more attractive at current valuations?
No, I mean, clearly there are a whole lot of things happening in IT, then your oil and gas and public sector banks. So the sector there where a lot of these things will happen. But I don't have any new thing happening. I mean, most of these things we are already having, like we were holding Infosys, so things have happened somewhat there. And I still think that tech will be a positive thing. Deal flows will improve. The US response to the industry will be positive. But it's a matter of time that investors reappraise Indian tech companies.
You know, actually we've briefly alluded to both things, one oil and gas and Infosys. I'm talking about near to medium term, something which you dislike talking about. But the last couple of weeks, two spaces which the focus wasn't there broadly, IT and Infi in particular, and oil and gas, because of so many misses, expectations which sort of are belied, have done very well. What is the reaction of both these things going to be? Is there a little bit of left out feeling which might propel the market little higher, or do you think? I mean, how do you read this? What has happened?
Yeah,
with earnings and oil and gas. Yes.
Take oil and gas.
Yeah.
After 2004, when the oil price was $25-30, when the oil moved in last 7-8 years to 110, 120, and threatened to go to 150, I think Government of India became completely helpless and came to the rescue of the market and provided all kinds of subsidies from the budget. Now, for last 1 or 2 years, this oil price is stable, and it looks to be remaining stable at around this level, 110 or so, 100 to 110, for some more time. And slowly the oil prices, diesel, petrol prices have been catching up, and now little gap is there in diesel, and they might be out of this mess. So they have announced a program that 50 paisa per month they will raise, which is politically very smart. So once this journey is over of entire petroleum marketing companies becoming market determined, I think it's a very long-term development. It's not a short-term development. So one has to reassess the entire investing opportunity, not for short and medium term, but even for long term in a few of these counters.
No, in that sense, do these, with what you've heard so far, do these companies become investable? Because you've always said, I don't want to get into government-facing companies.
No.
And these are as government-facing as they get.
Yes. This is the worst form of the government-facing companies. Worst means absolutely worst. I mean, they got really almost non-existent. They became at some point. I mean, for a 2 lakh crore company to become a 12,000 crores market cap, or even lower than that, 7,000-8,000 crores market cap, is clearly you can't go worse. But it's at a price. Everything is. I mean, companies like these can become investments. I'm not suggesting that whether I'll buy or not, or I have bought or not, but I'm saying that these are investable long-term assets. Of course, those government whims and fancy will be there, which will make it very volatile, and maybe the policy may not go through. So those uncertainties are there. But at price to book 1 or below 1, these large companies with a promising turnaround in the policy parameters, one should should look at it.
One should look at it. All right, got that. Mr. Agarwal, thanks very much, sir. Thank you for your time. Great to have you with us here on Profit.
Yeah.
Let's take a quick break. We're back in 2 minutes.